What's going on, everyone? Matthew from therighttrader.com here, back again with another stock market video. Today I'm going to be doing an analysis, review, and price prediction on Overstock.com stock. And right now it's a up and coming tech company in the online retail space, which is obviously a huge industry, right? Mainly dominated by Amazon, of course, which has seen a tremendous run without any surprise there. And this is still a baby in comparison, right? It has a $2.15 billion market cap. It currently just broke above $50. But I think for people that don't have a lot of tech exposure in their portfolios and that maybe don't want to get into the Teslas and the Amazons who have already gone up tremendously, this is one that could see similar growth in the years to come, right? It's very small, and Overstock.com getting to a 10, 20, 30, or even 50 billion market cap in the coming years is extremely reasonable, right? That would mean only getting a bit of the market share of a company like Amazon, and they'd basically be there, right? In comparison, we're going to look at the Amazon market cap, of course, right? We're comparing a baby to a giant here, but Amazon is at a $1.59 trillion market cap. It is one of the biggest companies in the world, so you have to keep that comparison in mind, right? Overstock.com is still very new, much smaller. It hasn't expanded as much. It's still acquiring new customers. But like I said, even a relatively small increase in comparison, based on the fact that Overstock.com is so much smaller in market cap, that's going to reflect on the price, right? And when I'm talking, getting to a $20 billion market cap, that's a 10 times increase. That would bring the price to $500. And of course, that's a huge return right there. Could it even go to 50, 100 billion? Absolutely, in my opinion. And like I said, right, for those that might not know Overstock.com that much, it's a very similar formula as to Amazon. They're a little bit more focused on home improvement, furnitures, and things like that, which isn't a bad thing. I think it gives them a little bit of a competitive advantage in that sense that people might go to them more towards certain specific things and not really trying to compete directly or as directly as with something like Amazon. Now, let's talk about the actual recent price action and also the financials, right? I'm going to do a more detailed chart analysis later in this video as well. So right now, right, if we look at the past year, it was actually downtrending, but what happened is when it reached its low here in March this year, at $2.65, we've pretty much been going up nonstop ever since, right? This is a massive 2,000% return. Now, some of you might be wondering, well, did I completely miss the boat, right? I mean, this already went up 2,000%, and I'm looking at it at $53 right now. I do understand that point of view, and of course, right, if you're able to get it below $10, that was an absolute steal. But still, right now, you'll see with the financials, its $2.15 billion market cap is still extremely reasonable, right? And we may see a pullback as well for those. I don't own any shares of Overstock.com right now. If it gets a big enough pullback, I will probably consider it. Anything in between $35 to $45 is a pretty good entry level, in my opinion. That's not financial advice, just my own personal opinion. But like I said, no, this recent price increase is just a testament to the fact that this is going to be, in my opinion, one of the big up-and-comers in the years to come. Now, as you can see, its all-time high is around $85, and we're really, as we speak, heading towards that right now. Could we get a medium-term, short-term pullback? Yes, we could. Like I said, $30, $35, absolutely possible. We'll see that on the more detailed chart. But right now, we're really looking at getting back to that all-time high and maybe even, reaching $100 in the next 2 to 3 years fairly easily, right? We could even be higher than that. So just something to keep in mind there, right? We're on a full come back up, and we just broke out of this downtrend. Like I say, I'll talk a little bit more about the technicals and the chart and the price in the detailed chart analysis later in this video. But let's go ahead, hop over to the financials. Now, I don't do any deep financial analysis. This is just a bit of an overview level, but it's more than enough in my opinion. So here we have the last 4 quarters, right? We're going to go back to June of 2019 and see how the revenue, etc. was. So what you'll notice is the revenue has been fairly similar in the last 4 quarters, but one of the key things is their net income. Although they aren't profitable right now, right? They are running at a loss. They are moving towards profitability fairly quickly, right? And that's reflected on a couple other indicators as well. So the 3 things that I'm going to want you to look at here is the net income, the diluted EPS, and the net profit margin, because these three things have been increasing over the last 4 quarters, right? If we move over here, you saw we went from 6 to 8% on the profit margin, sorry, minus 8% to minus 7%, and right now we are at one of the best here, minus 4.65%. Very similarly, look at that net income, right? Minus 24 million, minus 30 million, minus 26 million, and now March of 2020, right, the last earnings was minus 16 million. So they're moving towards that profitability here, right? Just in between the last quarter, 2 quarters alone, they actually increased their net income by $10 million, right? So that's a pretty significant increase. If they can do that in the next 2 quarters, they're literally going to be at a positive net income. So very similar on the indicators such as the diluted EPS, that's also moving towards the positive as well. And also their cash on hand is increasing. So take a look at the cash on hand. We've got 121 million, 83 million, 112 million, and now we're all the way at $141 million as far as the cash on hand that they have. That's always a pretty key indicator. It really allows for a lot of safety in case things go bad for a couple months, or just to improve their expansion, to speed up advertising, a whole bunch of different things. Cash on hand is always a very important indicator. It's not for nothing that companies like Apple, who have tens of hundreds of billions of dollars on cash on hand, are so successful, right? It's because that is the foundation of the company. If a company is massively in debt, probably don't want to be heading towards that. Here they have a lot of cash on hand, so that's really going to help things out in the years to come, like I said, as they move towards further and further expansion. And once again, can you compare this directly to an Amazon or a couple of the other ones? Maybe not, but the fact of the matter is it is in that online retail space. It is a tech company, and you need to compare it to the others out there, right? A lot of the big online retailers such as eBay and Amazon, and actually let's go ahead and take a look at the market cap of eBay just for comparison. They're already very big, right? And there's not that many out there even in the first place, right? So when you find the small ones like this, like Overstock, that can really get some good expansion going, that's the type of position that I like to be in, right? Amazon, is it going to continue to do well? Most likely, but it's too big for someone like me to invest in right now. It's just not worth my capital, right? If I can better allocate it to something like Overstock, where I'm going to get higher returns, I'm going to go with that. So eBay, $41 billion in market cap. That gives you a little bit more of a reasonable comparison, right? So getting, for example, to $10 billion would already be a pretty big achievement for Overstock, but absolutely doable in my opinion, right? $10 to $15 billion in the next 2 to 5 years, absolutely reasonable, right? And that would already be a 500% plus increase right there alone. So, you're not going to find that with Amazon, for example. Moving back to the more detailed chart here, and by the way, for those of you who want to learn technical analysis in further detail, make sure to check out my course down in the description below. It's less than $20 and comes with a 30-day money-back guarantee. Teaches you absolutely everything you need to know about technical analysis. I'll leave a link to that in the description of this video, right? From candlesticks to trends, some risk management principles, support, resistance, buying and selling opportunities. Everything is discussed on how to analyze and spot these things for technical analysis, stock trading, right? And it can be used for cryptocurrency trading and forex trading as well. So this is a skill, in my opinion, that's applicable to any type of trading. As long as there's a chart, it's going to be useful to you, in my opinion. Really going to improve your knowledge. And let's look at the recent price performance. So like I said, we got that big increase, right? You could say that we're overbought, depending on how you look at it. We are overbought on the RSI right now, but keep in mind, we can stay overbought for quite some time, right? You saw what Tesla did recently. This is not a stock that you want to be betting or shorting, in my opinion, betting against or shorting. Typically, this is a stock that out of nowhere can go way higher than people expect, right? And could it come back down afterwards? Yes, but this is really a stock that can move higher. A lot of these tech companies have done that, right? Amazon, Tesla, many of them out there have gone up nonstop while everybody thought they were going to fail. Everybody was opening up short positions. They all got burned massively because they didn't realize that they're betting against potentially a future huge company, right? And that's why I think taking the long side is more wise in a situation like that. Once again, nothing in this video is financial advice, just my own personal opinion. But right now, the overbought RSI is actually a good thing in the sense that we are actually breaking out above $50. So in this circumstance, it is reasonable. And like I said, we could even reach higher levels, 60, 70, before even getting a bigger pullback, right? So can't be too quick to wait for a dip down to $30 or something like that, because sometimes those dips don't even come. But I will discuss why it is likely that we do see a pullback down to around that $30 to $35 mark. With that being said, though, I also wanted to point out, obviously, that just looking at the recent price move has broken us out of this long-standing downtrend, right? This is a downtrend that has been going since January of 2018, right? So a 2-year downtrend has now been ended with a massive spike higher. So this isn't just a fluke, in my opinion. When you see a move from $2 to $53, that isn't just a fluke. And this is key, right? I mean, this has gotten us in a whole new realm. We're now in a bull phase expansion like we had back here. Hopefully we're not going to get such a drastic move lower again. I don't see that happening though. So I'll go ahead and draw in the uptrend line. Now what I wanted to say is take a look at our more recent price performance, and what you're going to see is, of course, a lot of strength, right? I mean, green candlesticks, especially in the last few days, we're looking great, super strong on the MACD, bullish here, well above the orange line. Still green on the histogram. Like I said, we are above that 7 line, signaling a breakout on the RSI. Yes, we are high. We are what some might consider overbought in the medium term, but like I said, right, in the next 2 to 5 years, it's more likely that we're much higher than we're at now, and we have a huge amount of buying volume. So everything is looking bullish right now. We could still push higher, like I said, to $55, $60, $70. That could absolutely happen, right? Especially with these tech companies nowadays where people pour into them. I wouldn't be so quick to necessarily jump against them. But what I wanted to point out is we do have 2 open gaps, right? For those of you who don't know about gap fill theory, this is something that is key to technical analysis trading and can potentially allow you to get in at much cheaper prices than you normally would by learning gap fill theory. This is something that I cover in the course, actually. I have a whole video dedicated to that. Once again, link in the description. But basically, what gaps are is when a stock opens up the next day, either higher or lower than the previous day, that creates a gap on the chart, right? And we have one right here at, you can see it, at $35. So if we look at the high on this candlestick, it was 33.92, and the low on this one was 35.11. You can see that gap in price that forms a hole, and pretty much 99% of the time on any stock chart, these gaps need to be filled, right? Unless it's something, all the way back down to $2 where it's very unlikely that we fill it. When it's something like that, not that far from the price that we're at now, most likely we're going to have to come back down here. And that could happen sooner rather than later, absolutely, right? I mean, you see our support and resistance areas here. Now we have a bit more support at $40 and $50. So those are key support levels. As far as resistance, just to get that out of the way here, we don't have that much, right? We really are moving quickly back towards the all-time highs. I'd say we have some resistance around $63, $65, and then really, I mean, it's pretty much back to the all-time highs towards $80, right? And then, of course, $100 is going to be a big resistance level, but really not that much resistance, all things being considered. And now talking about that potential pullback that could be incoming, we'll be looking at, that $35 area and also potentially $30. Why $30? Just because we have a key level that we may want to test here was the breakout level at $30. That corresponds to this peak over here. Why would we want to test this? Well, if we are going to go back down to $30, which I do think is going to happen, right? So potentially here we might peak out at $55, $60 and then come back down for a while. If that does end up happening like I would probably expect here, what we're going to see is a move back down to $35 to fill the gap, and then just to, finish up that chapter in the stock's history, we'll want to come back down to $30 to test that previous high, close any breakout areas that were in the past, and then we'll be ready to bounce off this uptrend line here, the purple uptrend line, and then we will continue our stock price higher from there, right? As we'll then start moving back towards higher levels and really towards that $100 price point, which is going to be a key level, right? The $80 and then the new breakout above $100, right? That's going to be a fresh all-time high. Absolutely see it coming in the next 2 to 5 years, right? And any pullbacks here, I think you're just getting in a much better valuation, right? Which is always great. That's why if we do see a pullback to $30, I will heavily be considering opening a position, right? Depends on how the overall economy is, but for the most part, I would really like a entry price around $35 to $30 on this, and it seems like it's absolutely doable based on the technicals here that I just went over with you. So with that being said, if you enjoyed this video, please make sure to leave a like and subscribe. Make sure to follow me on Twitter. I'll leave a link to that in the description of this video. Live market updates there. And like I said, make sure to check out my technical analysis master course as well. Thank you so much for watching, everyone. Hope you have a great day, and I'll see you next time.